So there's three important things that I want to talk about in today's video. One is we saw a ton of call leaps in tech last week. Very unusual amount of them, and I'll go into that a bit more here in a moment. But the second thing I want to talk about is Nvidia's flow. We saw a crazy amount of bullish premium last week, just almost a record really week for bullish premium, and no surprise because of what we saw here for this breakout of this pennant formation. You could also consider it to be a downtrend, but a huge breakout emerged off of that bullish flow that we saw last week. So that's the second thing that I want to talk about. Then the third and final thing I want to talk about is these QQQ orders that we saw come in, because they ended up being extremely successful. Like, it's actually crazy that how many times we saw these prints hit the tape in different variations, different strikes / expirations, and all of those orders were successful eventually. So very rare to see such consistency, but we did notice an unusual amount of them hit the tape last week, and it was a very successful strategy. So I want to make sure you guys understand what they were doing there, because it will undoubtedly occur again. So going back to the first point that I wanted to make, again, QQQ, we saw a lot of bullish tech leap flow. And if you don't know what a leap is, it's essentially a year plus dated contracts for calls in this case. So we saw a lot of those taking place last week, and not necessarily a surprise to see that a lot of upside has occurred now since that low that formed over here on August 5th. And if you remember, we did have that major VIX spike into the 60s on August 5th. So that marked the bottom before more upside. So the leaps that I wanted to mention in today's video, the more notable ones, I'll go to the historical flow tab here, by the way. I'll go to the beginning of last week to the end of last week, and some of the notable ones were Starbucks and PayPal. So I'll show you some of those. These are very uncommon prints. If you are familiar with order flow and watch it, maybe even if you don't watch it a whole lot, you probably can tell that these are unusual orders, and some of these were pretty hefty in terms of premium. You can see here 5.3 million in premium, 5.3 million again over here in premium, both for PayPal and Starbucks. And if you scroll down a little bit more, 5.3 million again in premium over here, 4.9 million, another 5.3 million. These are hefty orders, and there are a lot of them. It's not just one order. There are numerous of these orders for both PayPal and Starbucks. So remember what I said about it being a call leap. These are for the 12/18/2026 expiration. So they have a lot of time on them, and they're relatively around the money. And by around the money, I mean, since this is the spot price of 93.67, it was executed at 95. So it's just a little bit out the money on this one. And then over here, this was slightly in the money for PayPal, 65 compared to 67.9. So these were around the money, nothing super crazy, which is pretty consistent with what we see in terms of call leaps being added in the market. Really, the most notable of these is the premium, the amount of premium that we saw on them, because this is a hefty amount of premium. Definitely is notable and something you are going to want to watch for. And whenever we see this amount of consistency in both of these tickers, or any ticker for that matter, in terms of leap flow, definitely something to keep an eye on, because they see something from a longer term basis that could mean that they're loading up for a more longer term setup in the overall market, not only for just tech, but definitely for these individual tickers. So both of these charts are pretty bullish. We can see here Starbucks, for example, huge gap up, and this occurred a little bit after we saw those leaps get added. So you could see back here 8/12, this was last Monday, so these leaps were starting to add on 8/12, which was August 12th, and then over here August 14th again, and then this gap update over here was the 13th. So they were adding before, funny enough, and then also after the gap up, which is very interesting, because typically you'll see them add before to an extent, and then they'll either exit that position or continue to hold. But in this case, they're so bullish that they continued to add afterwards. And personally, I believe part of this is due to this trend line right here. And I could be wrong with this, because they could be looking at just fundamentals and not technicals at all. But I find it interesting how they continued to add after Starbucks reclaimed this uptrend. It's very critical when there's a macro uptrend like this, which has been in place for over 4 years now. You can see here it started in March of 2020, but we finally were able to reclaim it after a lot of time under this trend line. So as long as it's able to hold this trend line, that means that the uptrend has been been reclaimed, which is very bullish, especially in a macro scale of a 4+ year uptrend that it's been holding so far. So I really like that it was reclaimed, and this is something that can see continuation as long as it remains above. So I'd say, at least for a trade setup, as long as it remains above this 90 level, it looks like it's going to have continuation from a longer term basis. And that's exactly what we're seeing here in terms of a complement of flow with the Starbucks leaps that are being added. Even this November one here, there's a lot more time that are being added to these calls, and that's just using your context clues with order flow. Again, I don't ever use just order flow by itself. It's a complement to something like technical analysis, which is more of my strategy in the first place. But that's just something that I wanted to mention here because it's very interesting that it just reclaimed that trend line. Very critical that it does hold if there's going to be any future upside. So I'll be watching this one for this week. And then next thing that I want to mention here is Nvidia. Like I said earlier, major breakout of this pennant over here. You could also consider it to be a falling wedge since we did break a downtrend, whatever you want to call it. We did break out above in a very aggressive fashion. So semiconductors had a positive week last week amid that market-wide squeeze, and we saw a very nice upside continuation. And one of the craziest things is the amount of bullish premium we saw. If you go over here to the flow overview tab and you go back to August 12th again, you can see here $668 million worth of bullish premium. So that is a lot. Very uncommon even for something like Nvidia. You can see here Tesla only had 151 million, so that's a ton of premium to begin with, but Nvidia was 668 million, so a lot of bullish premium here, and no surprise to see a lot of upside that it had afterwards. So based on what I see so far and how bullish it closed on the weekly, I consider dips to be buyable at the moment. So anything from around here to this line, but anything above roughly 118, I'd say these dips would be buyable for continuation. If we go back under, you're probably going to see a lot more chop, but as long as this uptrend, aggressive uptrend at that, remains intact above 118-ish, this should experience continuation higher. And this is one of those momentum trade setups because there's clearly a lot of momentum right now, and we'll continue to have and experience that momentum as long as it remains above this bias level here. So that's something that I'm watching for this week as well. And then the final thing, like I said earlier, that I wanted to mention is the QQQ put flow we saw last week, but not put flow as in bearish, put flow as in bullish, because they were put writing orders. And I'll actually go back here to historical flow tab again, and I'll look up QQQ. And we can start to see some of these emerge very early on in the week, and they're all highlighted in purple here. So what we see is a variety of pretty large orders. You could see 1.4 million in premium, 1.7 million in premium, even a little bit less than a million, all for the 455 strike, as well as the 457 strike a little bit later on in the session. And these had even more in terms of premium, 3.2 million and 1.1 million. And what's interesting about this is that these orders expired on August 13th. And you can see here, these were added on August 12th, which means that there was 1 day until the expiration in this case. And the goal of put sellers, which is what was happening here, these were being sold to open, by the way, because you could see the volume was over the existing open interest. But whenever somebody sells a put to open, that means they want to collect the premium of that order, assuming it's not a hedge. But for simplicity's sake here, they want to collect the premium of that order. In this case, the premium is $3.80 per contract. So their goal of these 3,801 contracts that they sold is to collect all of that premium by the expiration. And the way that they do that is by this order, this 455 strike, not closing in the money. And again, that's for simplicity's sake. Technically, you could trade it as well as the price of QQQ appreciates and depreciates intraday to multi-day. So I'm not going to get into that. But for simplicity's sake here, they wanted to see QQQ close above 455 by the next day on August 13th. And if that were to be the case, they'd collect the premium on those contracts. Again, that's a little bit more so overly simplifying it, but for the most part, that is what they did in this case. They sold these 455 strike, and they also sold these 457 strike for the 8/13 expiration a little bit later on in the day. Pretty aggressive, to say the least. You can see here, almost priced at $5 a contract. So this was quite a bit of premium that was being sold to open. And funny enough, you could see here back on that date for Monday, because remember Monday was August 12th, we had a major gap up the following day on August 13th. I believe that was PPI data that we had. So if you look at the 50-minute chart here, a pretty substantial gap up from that Monday. And then you can see we opened over here opened alone at 455. So we're already above that price of the strike that they had for this 455 puts that were sold. And then a little bit later on in the session, you can see over here, we're able to close a lot higher on the day. Specifically, we're able to close above 460 in the 462s actually. So they were able to collect all of this premium over here is $3.2 million worth, $1.1 million worth, $1.4 million worth. Pretty aggressive to say the least to sell puts like these, especially before data, but they were clearly confident that there would be a bullish response to that data, and they wanted to collect. And by the way, if you're unfamiliar with why someone would sell a put versus buy a call, in this case here, they wanted to collect the premium because the implied volatility was heightened. In this case here, you can actually look in the order details and see the IV was 27.4% on these, and then in the 455s, roughly speaking, was 28%. So they believe that the implied volatility was heightened, and because of that, they wanted to collect that heightened premium ahead of data. Typically, we see the implied volatility increase ahead of data, in this case PPI, and that's exactly what happened, and they were able to sell into that and benefit in the end because they sold pretty aggressive strikes in this case. Not that common to see that, but whenever you do see that and a consistent amount of it with a lot of premium like we saw here, we now know that it was very successful, all things considered. And this was only one day of last week. If you scroll up, you can find this happened numerous times. You can see over here this $3.6 million print for the 8/14 expiration. And they actually sold this the following day. So after PPI, they were so bullish on the market that they continued to sell these, and this was at the spot price of 457.08. So 3.6 million, 457 strike for the following day. So this would be after CPI. They're just so bullish on the market and believe that the implied volatility was still very heightened. And of course, as you can see here, for that following day, we did continue to go up and actually closed over here. As you can see on Wednesday, we closed over here at 462, and they sold, remember, at 457. That was their spot price. So they were able to sell around here, and they were able to collect the premium up here because it did not close in the money in that case there. And again, there's a little bit of a oversimplification because there's other aspects like the Greeks that can play a role, but in this case, they were able to end up very profitable on that, able to collect the premium. And you can see later on in the week, there were a couple other of those prints as well. For example, if you go a lot higher, they did the same exact thing for the following day for the 8/15 expiration, and they did this on 8/14. So triple day in a row, Monday, Tuesday, and Wednesday, they were selling these puts. In this case, they sold 1.4 million and then about 1 million after that, and these ended up becoming a success again. So we had a triple success there. You can see here another gap up over here into Thursday, and those were able to become very successful. So 3 very successful setups last week for this whale, or whales plural, we don't know. Regardless of who it was, whenever you see something like this in the future, this is something that clearly worked this week numerous times. So it's something that's going to be on my radar if we see it again. This was an amazing arbitrage opportunity in terms of that heightened implied volatility ahead of data, and there was a very bullish outcome outside of it. And even if you don't want to sell puts to open, because of course there's a lot of extraneous risks with that, this is still directional. Calls still paid in this case here. Even if implied volatility was heightened, calls still definitely paid in this case because we had a major gap up the following day, and then also from over here because of PPI, like I said. So there's still a directional setup in play for this. You don't have to just sell puts like we saw the whale do here, but this is definitely helpful to see that someone was super bullish on the market, believed that this was mispriced, and even if it still remained flat, they could collect on the implied volatility. But of course, we saw it ended up becoming very directionally bullish, nothing sideways at all last week with a lot of bullish outcomes. So this is what I wanted to share in today's video. Hopefully you found that insightful, and I will see you guys next time.